Welcome from Principal Accounting and Finance. Today we study how to make journal entry. ABC company is a merchandise company. Company purchase and sold product X and Y for April 1282. ABC company had the following transaction. So on first day, Mr. A owner start business with 200,000 by check and 400,000 by cash. So how can we record journal entry for that transaction? Debit uh, cash at bank. Yeah. And second debit cash 200,000. Yeah. And credit capital 600,000. And second day, ABC company purchase car for 20,000 by cash. So we record debit car 20,000 and credit cash 20,000. And 8 we purchase of the equipment for 50,000 by site. It means that we our our payment by bank. So debit office equipment, yeah, 50,000 and credit cash at bank 50,000. And for 11 we purchase product X for resale, yeah, 90,000 by site, mean that we payment by bank. Our company is a merchandising company, so when we purchase product, we record debit purchase account, or you can use inventory. Yeah. 90,000 and credit, yeah, cash at bank decrease. And next day we purchase product Y for resale by cash, mean that payment by cash. So the first we payment by bank. Debit you can use purchase or inventory account, and credit cash. How much? 90,000. No, 80,000. And the next we sold product X. So the first time we purchase and then we sold product X. Yeah, we get site. So immediate cash at bank 70,000 and credit we get revenue. So revenue from merchandising company we use account sale 9 70,000. And next we sold product Y, and sold product Y on credit mean that customer over our product, mean that customer we sold product X on credit, customer not paid us immediately, so customer will pay us at next time or later. Debit, we use account receivable. Account receivable mean that we sold product or service on credit sale, and 30,000. Yeah. And the next day, we purchase LCD for you in company for 3,000 by cash. LCD is long-term asset or fixed asset, so you can use debit fixed asset or can use a specific name LCD, and credit out cash out LCD in, yeah, 3,000 and 3,000. And next we paid marketing expense, so we sometimes we promote our product or service by radio or television or social media. So debit marketing expense and credit cash out 2,000 and credit in 2,000. And the next we pay salary expense for our employee by side, mean that payment by bank, debit salary expense and credit cash at bank 10,000 and this one 10,000. And the last one we paid appearance toll, so it is general. When we make business, we need office, yeah, debit appearance toll expense 2,000 and credit we payment by cash and the same amount 2,000. It is simple, not difficult, so I will summary for you. Yeah, so you must remember the first asset increase at debit side or DOR, and liability increase at credit side CO, and equity or capital increase at credit side CO, revenue or sale increase at credit side, and expense increase at debit side DO. So we have only asset and expense increase at debit side, other account increase at credit side, such as liability or equity capital increase at credit side and revenue increase at credit side. So if you understand file account, you will know how to record decisional entry. Yeah. If you had a question, you can ask. Thank you for watching.